How you doing, Bigger Pockets? Jamil here again, and we are talking how an investor can leverage their business in a down market and take advantage of incredible strategies to make money while things are pivoting. And I got with me my best friend in life, real estate, television, entertainment, investing, all things, my fiercest competitor that exists. In fact, there's nobody else out there who I think even matches this guy. The most incredible creative finance investor on planet Earth, none other than Mr. Pace Morby. How you doing, Pacer?
Bro, thanks for having me.
Of course.
Appreciate it.
I am always in awe of what you're able to accomplish with very little money. And the fact that, I've watched you over the last year accumulate, it's over 1,000 doors, right?
Yeah, this year I accumulated about 1,600 doors.
1,600, like, people in their entire lifetime may buy a door, okay? A door. And in a year, this man was able to accumulate 1,600 doors. And how much of your own money did you put into those doors?
Very little.
Very little.
Very little.
So a vague answer, but I understand probably why. 1,600 doors, very little of his own money. He's raised capital, a lot of creative finance, a lot of owner finance deals. And these types of opportunities are more available now because the market has shifted, because people don't have access to the same kinds of leverage, yet sellers still want to sell. And so Pace, the Bigger Pockets community are obviously some of the brightest that exist. They're very invested in their education. They're trying to get involved in real estate. And right now, some of them are fearful. They're thinking, I don't know if it's a good time for me to get involved. Maybe I shouldn't be buying right now, because what if I buy something and then the value of it tanks? They're waiting on the sidelines. Yet I understand that a lot of properties right now have some very cheap debt attached to them. Yeah. And so can you help the Bigger Pockets audience understand how can they leverage creative finance, subject to, owner finance, wraps, all of the things that come into the world that you're dealing in? How can they leverage these strategies in a down market?
Okay, so first and foremost, I wouldn't be fearful. I would be very, very excited, because for the last 7-8 years, I've been really dominating in the no money down game of creative finance. But now it's been amplified to the point where I'm actually overwhelmed with opportunities that are really, really good. In fact, they're better opportunities than I ever saw in the last 7 years. Second thing I would know is that my best deals were when I had no money, right?
Because you were forced.
I had nothing. I literally told sellers, I go, okay, great. So here's the structure that we're talking about. Now, how can I buy this with no money out of my pocket? And the sellers a lot of times will go, wait, what do you mean? I go, well, I just deployed a bunch of cash, which maybe I did or didn't in that situation. I just said, look, I'm trying to get into the game. One of my first deals I bought creatively, I told the seller, I'm trying to get into the game. It was a tired landlord, somebody who had owned a property for 30 years, and they were looking to offload the property. And I said, can I buy the property with no money down? And they said, why would I sell the property to you with no money down? I go, because I'm just trying to be like you. I'm trying to get in the game. And they looked at me and they go, no problem, I'd be happy to help you out. Still own that property to this day, makes me probably $1,000 a month in cash flow. Third thing I would know is that people now have this balance of like, should I go single family or multifamily? Guys, I do both. I did 56 single family deals this year, meaning I acquired and kept them in my portfolio. Now we do some wholesale, we do some fix and flips. Obviously, Jamil and I are on a fix and flip show on A&E called Triple Digit Flip. So of course we do all of the things, we run the gamut. But I also acquired 1,600 units in multifamily. There's no reason you can't do both. I tell everybody, get around the energy of activity. So get around people that are actually active, and you will therefore become active. Now, outside of those generic answers, here's what I would say about creative finance. In just this year, Jamil, in 2022 and going into 2023, people that bought homes in the United States, there's close to 1.3 million homeowners that purchased in the last 12 months that are now underwater. And about 8% of those people, so a lot, 80,000 or plus, are now currently trying to sell those properties, but they have no equity.
Right, so they can't even cover real estate commissions.
Can't even cover real estate commissions. Now, when you look at that, the agents are having a hard time offloading the properties. The sellers don't know why people aren't buying. Well, we all know the interest rates not only have gone up and doubled, but now interest rates are going to go up again in 4 or 5 days. They're going to go up again in 2 or 3 months. The interest rates are going to continue to go up. However, all the people that bought homes in the last 12, 24 months, they've accumulated mortgages at 2 to 4% on average. So it gives us an opportunity to buy those properties subject to take over that debt. And we can talk about that a little bit more in depth. In fact, if we want to do a whiteboard video or break it down on a whiteboard, I'd be happy to show you that. But sellers that are in pain, right? People that have no equity or they're going through a bankruptcy or foreclosure, think about what's going on right now in the job market. People are getting laid off like crazy. So what happens is now people that can't afford to buy a house need a place to rent. So what we're doing is we're taking over people's mortgages that can't sell. We're just taking over their payments. And we're taking those houses that we now have ownership of, a lot of times zero money down. In fact, I just did a video with Robuilt, who's also a Bigger Pockets character. Him and I broke down a whole deal I did with no money down over on his channel. So go check that out if you guys want to see that. We're taking houses that we're getting no money down, and we're turning those into rentals and giving people affordable rent. And I'm making the difference in the monthly cash flow. Pretty simple. You stack those wins over and over, you never have to work another day in your life. Okay, so for me, if I'm looking for an opportunity right now, I'm looking for people who bought properties in the last 24 months that have really low interest rates and also bought those houses with an FHA or a VA loan. Why would I do that?
Well, if there were an FHA or a VA loan, they're gonna have a very low rate, right? First and foremost.
Very low.
Second, they put down a very little amount of money on those properties, like anywhere between 3 and 5%.
Right.
So with that said, that means that you can probably get in with very little money.
Right. So if I tell people, think about it like with a car.
Yep.
Let's say that somebody goes down to a car dealership and they get a car with no money down. They drive that car off the dealership's lot, and then the next day they want to sell it.
You can't, because, well, they can't sell it for what they paid for it.
Right.
Because it depreciated.
It's the same thing with housing, right? You've got all these fees and commissions and real estate agents and closing costs and all these things that are involved. And so you can't sell a house you just bought 12 months ago for the same price without cutting a check to get it out, for commissions. So I basically am going to the people on Craigslist and saying, hey, I saw you have a car. You haven't been able to sell it. Would you let me just take over the payments? Now people go, why would I do that? Why would I take over a car that somebody else couldn't sell? Well, couldn't you turn that into a Turo? Couldn't you turn that into Uber Eats? Couldn't you turn that into a Lyft car? Couldn't you do deliveries for corporations? I did this when I was 16 years old. I used to drive and deliver people's payroll. People have full-time livings as mobile notaries that are in their car all day long, traveling salesmen. You can turn a vehicle that you take over payments on into a big, big money maker. So if you can do that with cars, why can't you do that with houses? Well, that is exactly what we do. We do sober living, we do Airbnbs, we do midterm rentals, we do all sorts of things with these properties that we take over subject to. Now, the other side of it too is in a down market, what happens is there's sellers that a year ago, 2 years ago, they were living in the euphoria of housing prices are really, really high, and all these people in my neighborhood were selling for a really high price. Now the market's gone down 20% in some places, 30% in others, and the sellers are still stuck in this mind frame of, I still want my really high purchase price.
Right.
Okay, so in that situation, those people don't have pain like subject to, they have the desire for gain. So I look at it as pain and gain. Okay, gain is seller finance, pain is subject to. So in seller finance, these sellers just want a higher purchase price, right? So I just closed on a 254 unit multifamily deal where the seller had the units on the market, but all of a sudden the multifamily market plummeted, tanked.
Yep.
Because the debt or the loans that a buyer could get have now all gone out the window, or they've doubled in their expense. So for a $16 million purchase price, which this owner was trying to sell it for, he now is getting offers at $11 and $10 million.
Because the debt that's available right now is so high that you actually have to be selling at a much higher cap rate in order for any lender to want to be involved in that deal.
Right. So this is what I did on that deal in Springfield, Illinois, is I went to the seller. The way I found this deal is I was looking on a piece of software that was looking at people's roofs, and it was telling me this particular property has 41 different buildings and there's 7 different colored roofs. What does that tell? What story does that tell you?
Well, that tells me that the owner has been hodgepodgely remodeling the property and updating it, meaning that they probably don't have access to a lot of capital, right? So they'd probably save up some money and they'd be like, okay, let's change the roof on this building. And then they'd, wait a few more years and then another problem would happen. And so they're not doing any preventative care. These people are always reactionary, and reactionary people, the typical reason why they're being reactionary is because they don't have the money to be preventative.
This is what this seller was doing. They retired based on this building. They've owned it for over 30 years. They haven't been doing anything with maintenance. They've been extracting all the cash flow out of it and living this really good, lavish lifestyle. And they quit their corporate job over this one building.
Wow.
Okay, this one building, 264 units, throws out $250,000 every single month. That's a lot of money.
It's a lot of money.
Okay, but with their debt and the management and the other things and payroll and whatever else that they have on the thing and taxes and insurance, they're probably taking home $90,000 to $100,000 a month, and they're just going out and spending that money like crazy. So when they have a roof that's cost 10 grand on one building, instead of them going, you know what, we should just replace all the roofs, they do the hodgepodge method. This tells a story. And when you understand how to find these little situations, you can extract that story and you can figure out what would be their motivation. So the seller was trying to sell. They had it listed. It's been listed for a good amount of time. They actually had it for sale by owner because the broker and the listing agreement actually had ended. They'd been trying to sell it for so long. So I called them and I said, I see you're selling for 16 million. Is there a reason why you converted from a broker listing to a for sale by owner? Was there something the broker couldn't get you? And I told the seller, I allowed the seller to create a common enemy with me. That's not something I want to always do with brokers, but the listing was already over.
Right.
And so the seller then went on to complain about the broker, and the broker
found alignment with this guy.
Found alignment.
Yep.
And I said, okay, well, what if I could still get you the purchase price you were trying to get? I imagine you're probably getting offers at $11 million, $10 million. He was like, yeah, everybody's lowballing me. Okay, I'm not going to lowball you, but I am going to ask you for something in return. If I pay you $16.9 million, make sure you get that. I won't fight with you on price. Would you be willing to give me seller finance? And the seller, this is what's great about multifamily, they all know seller finance.
Yeah, because it's a big strategy that gets used in multifamily deals all the time.
All the time. They're very savvy. And so they said, well, what are you thinking? I go, well, I imagine the property needs to be renovated, which is probably one of the reasons why you're wanting to sell it. They said, it does need to be renovated, but it's not that bad. I told the seller, look, I've been doing this a good amount of time. When I hear the words, that it's not that bad, that means it's millions of dollars. Turns out I was right. So I asked them, I want $0 down, I want 4% interest, and I want a 30-year note, which means they give me 30 years to pay them. The seller says, I don't want to give you 0 down because you have no skin in the game. And I go, well, I actually will have skin in the game because
you're going to be renovating.
There you go.
Yeah.
So I said, I'm going to go get investors that invest with me, which I did. I went and found investors that brought the money to renovate the property. So I'm into the deal, no money to purchase it and no money out of my pocket to renovate it. And all the skin in the game, I will put it into the property. And the seller wanted to see a scope of work. So I flew up to Springfield. I did a scope of work. I said, this is what I'm going to fix and this is what it's going to cost me. And the seller said, done, let's do the deal.
Incredible.
So I just closed on that deal yesterday.
No money out of pocket.
No money out of pocket.
$16 million purchase.
$16.9 million.
So, I mean, this is the beauty of creative finance, right? Because I'm primarily a cash investor. So if I'm buying something, I'm always coming to the table with money. It's just the world I play in. Unless I'm wholesaling. When I'm wholesaling, I'm flipping the contract, then I get to make money without needing money. But when you're doing creative finance, you actually get to keep the property. See, for me, every time I wholesale a property, guess what? I don't own it, right? And one of the common jokes that Pace and I have between us is the fact that every year I write a huge check to the IRS and every year he gets a refund. And Pace makes more money than I do. And so that's actually annoying because how the heck does he get to make more money than me and get a refund every year and I'm paying the IRS a substantial amount of money, 900 grand last year. I mean, guys, that's sickening. The reason that that's happening is I'm not holding property, right? So this year I've done a lot to change that. I'm starting to acquire, get invested in other deals. Gonna be doing some multifamily projects with my brother here. But this concept of acquiring and holding through creative finance, guys, it is phenomenally powerful. I'm watching thousands of students around the country in the sub-2 mentorship just absolutely crush it. And they're not all holding properties. You can also wholesale a creative deal. You can keep it for cash flow. You can keep it for depreciation, even if there's no cash flow. I mean,
you can fix and flip them.
You can fix and flip them. That's called a
subtail.
A subtail. So there's so many strategies. The key here, though, is to understand that in times where the market is shifted and we see values start to decrease, that doesn't matter. What matters is the use. So we understand from Pace today that if you are paying attention to what you can do with the property versus what the property is worth, that change in perspective, that change in mindset allows you to maneuver in a much more powerful way. We get way too stuck on real estate values in this game of real estate because we're always looking at it as a zero-sum game, right? I'm either gonna win or I'm gonna lose. It doesn't need to be like that. You can win all the time if you understand the right strategies to use. And so, again, we learned about acquiring through creative finance, looking for properties that were purchased in the last 24 months that have cheap debt, either FHA or VA loans. You're looking for sellers who either have the pain or the gain mentality. The pain being they need to sell because there's no equity and you can take the property subject to, or the gain mentality where they have a really high price expectation and you give them that price expectation when they give you terms. And that often means owner financing, and oftentimes you can do that with $0 out of pocket. Now, lastly, guys, Pace had mentioned creative ways to hold property, where you can actually cash flow property at a much higher rate than a standard rental. We're not going to get into that in this video, but in the next one, we'll be talking about the creative ways that you can hold property and actually get a tremendous amount of money for those rentals beyond just being a straight landlord. So thank you so much, Pace. This is an incredible time. Always good to hang out with you. Anywhere that you can tell the Bigger Pockets audience and where they can find you?
Yeah, find us on Buy This, Not That on the main YouTube channel for Bigger Pockets. And by the way, give Bigger Pockets some love in the comments by saying congratulations on 1 million subscribers. I think that they're the first real estate-based YouTube channel that has actually hit 1 million subscribers. That's a big deal.
Huge deal. Bigger Pockets, thank you so much for tuning in, and we'll see you in the next video that's going to be about creative ways to hold.